Hey, welcome to PriceAction Arena. So today we are going to discuss about the TCS, whether it is good or bad, or is it going to improve, or are we is it a right time to take entry or position into the TCS? So this IT stocks are performing well since Jan. Because in Jan, Accenture has declared very good results in US, stating that because of this reason why the stocks are performing after January. So you can see this is a cup formation, and it has given the handle pattern after cup. So after breakout at 2926, it started moving higher, and now it is at 3200 or 3240. So, is it the right time to enter? So, why, and also why the Infi or HCL Tech stocks has performed well? You can see Infi has raised 5%, and HCL Tech has given around 6% for rally today. But TCS, despite of posting better results, why TCS has not picked as much as other IT players? So the reason is compared to the previous quarter, TCS has posted best quarter results in 9 years. So, despite of this, the stock has fallen. So, the reason is the last quarter TCS has uh, even shown the better recovery, but despite such a good recovery, even then TCS was not recovered as much as HCL or Infi. So previous quarter there was some good operation margin that was posted by Infi and HCL, and that is the reason why they are moving into the stocks like HCL or Infi, because they given the better leverage, and also their PE is low compared to TCS, and they are also posting better results in line with TCS. So TCS is number one. So obviously PE will be high because you have a high margin of safety. So even then, you can see HCL and Infi is also performing better, but their margins are little higher. Operating margins are very little higher compared to TCS, and this has given the better advantage to the uh, stocks in other than TCS. So now, whether we can enter or not, we have to wait and see, because let's wait for 20 MA to be touched, or probably this if this support is been restricted 3000, probably you can take the trade and you can hold on for now. If the Infi and HCL performing better, then you can take up Infi instead of TCS, because this has not performed well. Probably it will pick up tomorrow or day after tomorrow, but better to be on the better performing stocks rather than staying on the uh, normal consolidated stocks. So HCL Tech is preferable because this has given good rally. Uh, you can see it didn't even give a handle pattern. It retested and it fly now. It took the flight. Now, if you see TCS, then it has consolidated and given the cup pattern. It even fell below the cup. So this has given clear indication that this has lower flight than the peers. So that way you can differentiate between the stocks if you want to pick. So you can see after breaking out, even Infi didn't stop anywhere. So Infi, Wipro, and HCL has better quarter results before, and they are expecting the same performance in this quarter as well. So if that is not in line with the expectations, you can see TCS, Infi, and all IT stocks start to fall, because all the good news that are there, they have already been chipped in. So that is the reason why you see stocks are at all-time highs. 1185 and 1300 is very far. So this you can see that the stocks are performing. before the quarter results based on the expectations. So you should not take any fresh positions now if you want to hold long. But if you are a trader, you can try to buy at every like whenever you get an opportunity. I would rather wait for the stocks to touch 20 MA, because if you have already missed this, then it is no use of entering here, because you have to ride with the expectations, not after the results. Results uh, will be like, you can see earlier that if there is any better than expected results, then you can catch up the trend. But if they are going to be normal, just like TCS, then it's of no use. It all depends again on the quarterly results. So you can see here, you can draw patterns like this, and you can take up the trade instead of see if you want to put a stop loss, or if you want to average, where would you do the average, because it's already very far from the levels. Or if the results are good, then probably you can take a little higher risk, but you should exit the 20 MA. So since it is already here, probably in 1 or 2 days it will move higher, but the 20 MA will come late, and you'll see there is some difference between 20 MA and here, like it is around 1239 to 1340, is almost 100 points. So by the time it starts falling or consolidating, this 20 MA should be the baseline for you to continue the trend. So that's how you take the trade or invest. So you have already, like, if you have not invested here or here at the breakout, then it's of no use entering now. If you have taken the trade here, then you would have got into already into profits by looking at 20 MA. So better to stay in silence. You have there are a lot of opportunities in stocks. You don't have to be like taking the risk taking trades. Instead, or if you are more comfortable in IT stocks, then just average them up. Like buy 50 now, 50 or 20, 10% now, and keep buying every day 10% if it is stock is moving higher. Do not invest entire portfolio into that single stock. So I have already posted few stock picks and for this year, and also I have posted few stocks for the coming week, which gives a breakout. So you can take up those instead of buying it in this expensive and considering very risky strategy to enter now. And uh, so today Maruti has given good breakout, and it has uh, sorry, yesterday itself, I mean Friday itself, it has given the breakout, and you can see it has already touched the all-time highs, not all-time highs, 52-week high. And you can see after such a big volume, again there was some another good volume here. It's in the beginning markets fell, and this also has fallen down, then it started performing again. So probably you can take up the trade if the stock is moving higher again. So this way you can take the breakout trades and then enter into the positions instead of buying it risky. Uh, so auto sector is performing well now. So you can see auto is having, like Tata Motors today has given 11% of rally. So the reason why it's performing is because there is some built up news that is coming, which is very good for the stock, and uh, it is starting to rally very high. Like initially, Junjunwala has acquired the stock somewhere here in these big candles, somewhere here and here. So probably here institutional investors, or maybe he again has invested in this. Probably we have to see, but this stock, it will try to be in consolidation for a while, because it has already given 11%. If not, it will move higher tomorrow for around 2-3%, and it starts to consolidate. But I don't think this price will be reached unless there is a market crash like this. You can see this big candle is opposed on 21st December, and it took support from the same level, and it went from this high, from this low. So you have to, we do not get these kind of opportunities every time, but after this rally, it will stay in consolidation somewhere. It will give around 10 or 15 rupees, 15 points of rally, and then it starts to consolidate. So similarly, we have to wait for the opportunity instead of jumping into the trade looking at the 11% of rally. Probably in 5 or 6 days, it will try to move again. It can move to 230, but it again has to consolidate. Whenever there is a big volume, it will surely consolidate somewhere here. Whenever you see a big volume here, you can see it's trying to consolidate again. Probably it will move 3 or 4 days higher, but obviously it will on someday it will fall, and we can take up the trade. This way you can wait and watch for the trade, but you have to be sure that you can take the entry at the support levels. You should be very sure, like here you can see, if this level has come or this level has come, you have to be ready and take up the trade. Just like what happened in Maruti, it has given opportunity to those who has missed. So it has given opportunity here. It took support from here, and it has performed well after that. So probably in 2 or 3 days, it will move further higher. So if the volume is this high, and the this volume has to be supported again. If it is not supporting, then it is of no use. You can see, after such a big volume, there is no support from the market. Even though the volume is high, the stock has not moved anything. So like this is a indication that the stock will not perform in the coming few days. So you have to wait for the right opportunity, and when it touches the support, you have to buy, and then it will start to move high. So now today it has actually has the support for the volume for on Friday. So these kind of trades are good to take. You can buy again after, if this breakout happens, or if this high is crossed, then you can take up the trades. Otherwise, you just have to follow 20 MA pattern. So if someone has bought here, then they are all, you can they can buy the, they can put the stop loss, trailing stop loss here, so they will never go into a loss. Someone has bought here at the support levels. You can see that this 20 MA has some, like you are around, let's say, if not here, if you have bought here, so it will be around 7422. So you are already in profits of 200 points. So that way you can mitigate the risk of uh, having a negative in your portfolio. So 20 MA or 50, whichever is helpful for you, you can change that here, but I usually follow 20. uh, in a bull market you have to follow 20. In a consolidation phase, you can, or consolidation, or if the markets are has turned negative, then you can follow 50 or 200 MA. So you can see 50, so it has taken kind of support level, it has taken. So by using 50 MA, you can see, you can take up this trade, because this is a double confirmation. It has taken the support, and it has almost taken the support, or it has respected this a moving average, and it has moved higher. So that way you can take up this trade, and probably you could continue. So now if you consider 50 MA as a trailing stop loss, then it will be around 7349. So you will be around 50 or 60 points of trailing stop loss. So in a bull market, better you stick with 20 MA instead of 50. 50 is very high, so better it is 20. So this is how you take up the trade. And please subscribe to my channel, and also follow me on Twitter. I would post some breakout patterns whenever I find anything interesting, so you can take up the trade. So, and also there is one more disclaimer that I need to post, because these are not my recommendations, or I'm not insisting anyone to buy. This is for learning purpose. I have told you all the insights that we can make out of the price and the stock results. So better to stay with like you can invest in tranches, and you can continue your portfolio, or just understand how the market behavior is. I'm explaining in terms of how we can take up the trades and how we can manage our risk. So this is what I'm explaining. So don't consider this as my advice to you to invest. Please consider your financial market advisor, and then consult them and then invest. Thanks for joining. Bye.